Hello friends, so welcome to bispsolutions.com. My name is Ali. So this is again going to be a financial consolidation series and I am going to discuss about balance sheet today. How we can build or make a consolidated balance sheet. So they are the conditions that we have discussed on it. That they are the conditions, the method. That first it's called the cost method, fair value method that we already discussed. Then we talk about the equity. Now we are going to talk about the third method that's called the consolidation. Okay. In consolidation, the third method that's called the acquisition, that once the company owns more than 50% of another company, then the company uses the acquisition method. And in this method, that company need to consolidate the financial statement along with subsidiaries. So there are two conditions when company hold 100%. The other company is stock. It's called the controlling interest. No need to have any other account. Okay, company hold 100% stakes. Now the another condition is this called the more than 50% but less than 100%. In this, the subsidiaries. Okay, so in this condition, parent need to create a non-controlling interest account in the balance sheet. So how we calculate for the non-controlling interest? Let's check for the same. So this is the picture of more than 100% and less than 100%. So we are going to check in Excel. So here's the condition like pre-acquisition. There are the two balance sheet. This is the balance sheet of subsidiaries, and this is a very summarized balance sheet of parent. The element of current assets, fixed assets, liabilities, common stock, and parent and retain earnings. So the condition here is the condition that we acquire 75% of share in subsidiaries where the fair value of the assets is 2,400,000. We acquire 75% of a stake at the rate of 3 million. Yeah. So what we need to do first of all, we need to check the implied value. We own the 75% only. So what is the value of 100%? So we calculate the value, implied value of 100% stock. And this what we need to do here. We know that this is a value of 75%. So we acquire the same, like we calculate this is a value of 3 million divided by 75% multiplied by 100. We need 100%. Okay, so here we go. Like 4 million is a cost of 100% stock. Okay, so what we need to do second we need to calculate the net identifiable assets so that we can calculate the goodwill. Okay, so how we calculate the goodwill? Let's check first of all the identifiable assets. So here we go. That identifiable assets of subsidiaries, current asset is 700,000, where the fixed asset is mentioned in the book is 1,400,000. One more account is here that's called the fair value of assets. Fair value of assets, like we know the fair value of is for the assets is 2,400,000, where the value is written on the book is 1,400,000. So what we need to do, we need to add up the fair value of the assets. We added the 1 million here because it shows the book value. Here we go, the fair value minus the book value. So 1 million is remains. So we add up the 1 million as well for the fair value assets, and we minus the liabilities if 150 million. So here we go, the total identifiable assets is 2,950,000. So what we do simply for calculate the goodwill, we simply check with the employed value minus the net identifiable of assets. It's become the 1,050,000 as a goodwill. Yeah. So we again calculate the non-controlling account we need to have in balance sheet because we do not hold 100%. We hold only 75%. They are the people who own 25% of a stake. So what we need to do is we need to calculate the same. We calculate the same with the total employed value is 4 million divided by 100, but we need the 25%. Okay, so we multiply 25%, it's become the 1 million is a net non-controlling interest account. Okay, so when we calculate the consolidated balance sheet, first the item its own in liquidity order, current assets is 2,600,900. So how we calculate the SIP? How we calculate the same? We calculate the same with the help of subsidiaries current assets. We have this 700 and the parent current assets is shows this 4 million. Okay. And we minus the acquisition cost. The acquisition cost is 3 million. We cause the same. So it becomes the 2,600,900. Then we calculate the fixed assets. Fixed asset, we know the fixed assets of the subsidiaries, fixed assets of parent. Then we add up the fair value as well of the fixed asset because in book it's there written only the 1,400,000 where the fair value is 2 million. So we add up the 1 million additional here. This becomes 6 million. When we calculate the goodwill, we already calculate the goodwill here. The implied value minus the total identifiable assets. The same thing here it's written. Then we calculate the total of three items. The current asset, fixed asset, and goodwill identifiable. The total asset shows 10,550,900. Now we calculate the liabilities. Liabilities add up simply. This is the 150. This is 225. They become the 375,000. Where the common stock here, the picture of common stock, it's only showing the common stock of the parent. Why it's not showing the subsidiaries? Because we already pay for it. We are now it's become the consolidated balance sheet at parent level and we already pay for it. That's why we do not, we remove the same common stock and retain earning from this while consolidating because this has become the parent now and we own 75%. So we add up the same common stock along with paid up capital is there only in parent and here is retain earning of parent showing the same 3,475,000. Now here's come to the picture that we create a non-controlling interest account. Non-controlling 1 million we already calculate for the same. So here we go, the non-controlling, the same amount is 1 million. Employed value minus acquisition cost, also we can calculate the employed value. So we calculate the same. Here is the answer like we match the current assets, total assets plus total liabilities is matching. Okay, so in this way we can calculate non-controlling interest. When we have a non-controlling interest, how to consolidate the balance sheet. So that's all for today. Should you have any question, you can visit to our website www.bispsolutions.com. Have a great day ahead.